Hi, I'm Peter Rose, founder of Longwood Currency Trading. Why should a 50-year-old look at trading Forex? Well, why not? Yeah, I know my demographic on my analytics says that an overwhelming majority in the last 28 days has been 100% of my viewing audience is in the 21 to 34-year-old age group. And that's a good age group to look at because you guys are young enough that you can make mistakes in learning a new skill and have the no fear of loss for a while, because we know we're going to lose for a while, to gain those skills so that by the time you have 3 or 4 years of trading experience, you'll have everything all figured out and you'll be set for life if you're consistent with it. Now, the statistics are 90% are going to fail, and they're going to lose 90% of their money, and they're going to lose that very quickly. That was a statistic developed by a brokerage firm, a FOREX broker, many years ago. Came up with a 90-90-90 phenomenon. 90% of traders lose 90% of their money in 90 days. They did a survey over 25,000 of their clients, 43 million transactions, and that's what they came up with. The interesting thing is that 72% of those who failed, 72% of the 90% that failed, had winning trades, were positive, but they still lost money. How does that happen? Well, I think it's because of that young demographic. You guys are all watching of these younger guys driving around their Lambos with their ball caps on backwards and talking trash, and you think that's what you're going to do. And you get in there and you try it, and you lever up 200 to 1 on your $500 account because you're broke and you can't afford anything, can't afford good education, so you listen to these guys talking shit at you, and you lose your money. And then you go into prop, and they have you put up $200 or $300, and you lose that because you have no idea what you're doing. And, the prop firm is taking the other side of your trade, so if you go in to buy long, they're going to take the short side of that. They're going to fill that order, and they're going to hold that order in-house until the end of the day when they flush everything out into the interbank market. So they're making you $300 on your prop fee, and every time you lose, they're making the money because it's a zero-sum game. So what incentive does the prop firm have to help you? Now, there are a couple that are good, but the requirements they have for you to get in are not real life trading, consistent trading ability. So that you get these failures as in the 21 to 34-year-old group, and you're off to something else. What are you going to do? Trade crypto or old tires or some shit like that? You shouldn't be trading because you don't have the patience for it. So the 50-year-old, however, is different. You've been beat up before, and you understand that things that are complicated or worth learning take a while to learn. And you've gone through years of work to build skill in your particular profession, whether that's in maintenance, yard care, automotive mechanics, architectural design, engineering, whatever. It takes years to develop those skills. You know that. So you're not going to go in there and get involved in the currency trading thinking that you're going to trade at 200 to 1 and replace your job income, because you're not. What you understand is that you need to learn a skill. So let me address this to that 50-year and above age group, because all of the folks that I'm talking with via email right now, I think all of them are 50 or over. It doesn't show up in my demographics, so you must be... You're watching my videos, I know you are, because we're talking about the videos all the way through. But if you're 21 to 34, you should watch this video, because this is where you're going to be when you're 50 years old. You're going to be faced with job discrimination. I was a software engineer. That's a pretty neat field to be in because your brain doesn't atrophy when you're 50. You're just really in your prime for solving problems and all that other stuff. But the software companies are really not run by engineers. They're run by their HR department and their politically correctness and all this other kind of crap. And why would you pay, in their mind, for example, a software engineer, why would you pay that senior engineer $110,000 a year salary? This is the end of November, actually, of 2024. Why would you pay them $124,000 a year for a senior engineer that's a 50-year-old or 45-year-old or whatever, when you can replace that engineer for $30,000 with some fucking kid in Costa Rica? You know, that's what happened to me. You know, I worked for LL Bean for quite a few years. It's all young people, and they're all running around, and that's fine. I got work to do. We're doing software engineering. They replaced my job with 3 kids in Costa Rica. That's what they did. This is LL Bean, the primary outback, roughing it, outdoors company in America. Now, one of their products is produced here anymore, and they outsource all their software engineering to Costa Rica and to India. If you're a full-time worker, it's all going to contract work because the company can say, oh, well, thanks a lot, your contract's over, or thanks a lot, we don't need you anymore, and you have 15 minutes to clear your desk. I've been through that before. I got a call. I was just getting out of the shower, and I got a call at 7 o'clock in the morning by my contract administrator, and he goes, don't go into the office today. Come and see me. Okay, I know where that's going. That is the view of the 50-year-old's life when they wake up every morning. Is it going to be my turn today? Am I going to get replaced by somebody? Am I going to end up breaking my arm, and then I'm an auto mechanic, and I can't do my job for 6 weeks, 10 weeks? What's the dealership supposed to do? Put me on paperwork? No. So you have job discrimination that's facing you. Number 2 is you've worked hard all your life, and you deserve the jet ski that you have and the nice house in the suburban area or the nice condo or wherever you're living, and you're just working away and you're doing all this kind of stuff, and you wake up one day and you're 50 and you don't have enough savings. Yes, you've been contributing to your 401k all along if you're in a professional environment. If you're working a job as a waiter, you're not in a 401k because nobody's ever at a job long enough to participate in a 401k. And the business wouldn't have the money to support the 401k anyway, so you're not going to get one as an employee like that. And if you lose your job, the music stops, and the $400,000 or $500,000 that you've got in your 401k is going to do you any good, because if you try to take that out before age, I think it was 60, 59 and a half, something like that, you not only pay the taxes on the money, but you pay a penalty fee for early withdrawal. And you're 50 years old or 55 years old. So these are the things, you guys that are 21 to 34, that you're not faced with. Oh, I get fired from my job, I'll go find another job. Or I'll go live on the beach for 3 months, or I'll travel the world and, I'll come back and I'll be okay. And you're not going to be okay. There's no need to be fearful at 50. You just need to change the way that you think and start taking steps to improve your financial condition instead of improve your dining out capabilities. I didn't discover the Forex market until I was in my 60s. I had done 40 years of real estate investment, and I was able to retire a millionaire, but I before I retired and started selling my properties off, in 2007, I took a look at the Forex market. I go, wow, this is really terrific. I should study this. This is great. This is a much better vehicle than real estate for a lot of reasons. Today, 14 years later, 12 years later, after discovering the currency market, I can look back over my life and say, if I would have had, we didn't have, when I started out as a 23-year-old looking for things to do to make money, just getting out of college and stuff, the entry level to starting a business or doing whatever, those are all really high. I try to get a job. I had a degree in physics. I went to grad school, and I can't do that. I'm out, and I didn't know anything except karate at the time, so like a dumbass, I started a karate business. I opened a karate school, and I've been involved in martial arts for 55 years. I've taught thousands of people, and that business was the thing that started me out in investing in real estate. I saved my money. I didn't do anything when I was started my business. All my money went into savings. And then when an opportunity came up, one of my karate students was a real estate broker. I started learning about real estate from him. I got involved in that. I bought my first property, wiped my whole savings out. I went all in. I'm all in. All chips to the center of the table. And I bought my first property. And I learned the rules of that game. And I went through and I bought another property. And it's a long process. But if I would have had the availability of the currency market and somebody to knock me on the head and say, hey, you should take a look at this, at that time, it would have been a whole different story. So I'm looking at the 50-year-old age group now, and I'm saying it's not too late. It's too late for you to get involved in real estate because that's a long haul. That's a 5 to 8 year % appreciation on the real estate if you don't run into a massive dump like we've currently are about to go into and have gone through several times. It's a slow process of growth. So you look at something like the currency market, and if you go to my website, longwoodcurrencytrading.com, and you go to the currency trading page, there's 7 reasons there why I've chosen the currency market to do my financial management within. It's a great market. There's great opportunity there. And so as a 50-year-old, you look at these morons that are out there with their ball caps on and backwards, and they're driving their Lambos, and they're throwing their money around, and they're talking about all the money that they're making trading, and you know it can't be possible in a reasonable environment. They're at 200 to 500 to 1 leverage. They're going crazy. They have no fear of loss because they got the time and the years to make up. You lose $10,000 today, that's fine. You go back to work and you grind it out. I enjoy watching these guys and listening to them. Some of them really know how to trade. And they're using that 200 to 1 leverage and they're making that work. But you go back in their early careers, they got wiped out. 99% of the people that go through that go to crypto and get wiped out, and go to here and get wiped out, and they end up serving hamburgers at McDonald's because they can't make it. But a few of them go through all that and they refuse to give up. They don't know what's going on, but they refuse to give up, and they finally are able to figure it out. You can figure it out on your own, but you're going to have to be willing to lose $20, $30, $40,000 to do that. You're not going to learn anything trading a $500 account. Oh, I doubled my $500 account in 2 weeks, and look how great I am. You're going to do that 3 or 4 times, and then the law of averages are going to catch up with you, and you're gone. Oh, I'll do it again. Well, how many times are you going to take $500 and run it to $3,000 or $5,000 or $20,000 or whatever it is and lose it? How many times are you going to be able to repeat that? As a 50-year-old, do you want to go through that shit? There's no need to. The 21 to 34-year-old age group thinks they're going to go in at 200 to 1 and take their $500 account and run that to $20,000, and they're going to take the $20,000 and going to run that to $60,000, and that's the way it's supposed to be. You're not going to go into it thinking that way unless you get the wrong education. If you get the right education and somebody can talk to you about risk management, not the way they talk about it, and talk about trading with a methodology as opposed to a system, a system is trading the London Open or Golden Cross, or when the Bollinger Band does this, or the RSI runs contrary to the... those are all systems. Systems ultimately don't work. There's reasons for that. I'm not going to go into it in this video because it doesn't make any difference. If you're interested in that, send me an email and I'll kind of explain it to you. But as a 50-year-old or a 60-year-old or whatever, I'm 75 years old and I'm still pushing it. So you have to understand, and you do understand, that learning something that's going to provide you an income is going to take some education, and it's going to take some experience. If I'm going to start working with somebody, you don't put anything more other than my fee, which is pretty high to do that, because I happen to know how to educate and do this the right way. But regardless of that, you put at risk when you get ready. We get out a demo right away, and you're in a real account with $1,000 and $1 a pip. So if you're in the U.S., you get a margin requirement of $650 on that mini account that's margin. So that leaves you $350 of runway at $1 a pip. That you have to lose 350 times, or 35. Yeah, right. You get $350. You'd have to lose 350 times to go to margin and not be able to trade that mini account. Well, don't you think you'd learn something in 30 or 40 or 50 mistakes? Well, maybe not, unless you had somebody there go, hey, Slick, look what you did. Isn't that something that we talked about not doing? Well, I just thought. Well, you're not supposed to fucking think. You're supposed to look at the methodology that you have developed in your head. These are the battles that I fight with the guys that are 21 to 34. They want to argue about it. Well, this is, my buddy Bob made $3,000 yesterday. Well, yeah, sure, Bob's trading a $40,000 or a $100,000 prop firm thing, and he went through the mechanics of the thing, and he's trading at 200 to 1, and yeah, that's great. He made $3,000. You don't have those skills. You're not in a prop firm. You didn't get your way through that, and you're not going to, because you don't know what you're doing. The 50-year-olds are standing and they're listening to me when I'm showing them the difference between what the thought process of a 50-year-old is as opposed to what a 21 to 34-year-old is, and what the needs of a 50-year-old are as opposed to what the needs of a 21 to 34-year-old are. And they're vastly different. And so when I'm talking with somebody at 50, I'm going to talk to them and address them and work on issues in a certain order that I wouldn't do with a 21 to 34-year-old, because it's different. The thought process is different. The risk capabilities are different, and they have time. You don't have time at 50 years old to fuck it up. You can't lose any money because you don't have any money, and you don't have the ability at 50 to make more money. You get laid off, I've been laid off. I was laid off from my software engineering job. It would generally take me three months or so to land another job. I've taken as much as 9 months to land another job, and that's when I was in my 30s, because the market sometimes is really bad. So at 50 years old, you get laid off, and you get faced with age discrimination. I did that. I get laid off. I was 55, and I had my recruiter tell me, don't bother to send your resume to that company, because they're gonna look at the date of your graduation of your physics degree, and they're going to know how old you are, and they're not going to look at it. They're going to say you don't have the skills. He said, I'm just telling you, don't waste your time. So when you get to 50, you understand that money is precious. You don't want to lose that money. So you start with $1,000 with a $350 risk to go broke. And we're gonna trade at $1 a pip. So you make 10 pips, you make $10. Ooh, boy, you can't even buy a pizza for that. But that's okay. You're not gonna make that in a day. You're gonna make $5 a day. On a $1,000 account, if you make five pips a day, $5, that's 0.5% return against your $1,000 investment. If you could do that 3 days a week, that's 1.5%. That's 6% a month. That's a 70% return on your money. How do you get that anywhere else? So it's not magic. It's not ball cap on backwards and balls to the wall at 200 to 1. It's mathematically, the path is laid out for us. I don't have the 21 and 34-year-olds that are listening to me and interested in the path. They want the magic sauce. And that's why I don't have any 21 to 34-year-old students right now, because I tell them, you either got to take it out of gear and forget the fantasies about 200 to 1 and taking your $1,000 account that took $20,000 in 6 weeks. You either get that out of your system, or I can't help you or talk to you. And they get pissed off at me and I never hear from them again, and that's okay. I'm not running a training business. I want to help people. So if you're 50 or above and you're looking at this currency market and you think it's a gambling arena and that everybody in it is crazy, we're not crazy. It's possible for you, and it's even more likely that you will succeed than it is for the 21 to 34-year-old. Isn't that amazing? You just might want to send me an email and check it out. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.